Clearly, many folks that nibbled at ride-sharing player Lyft's stock in the hours after its late March IPO could use helpful reminders on how to invest. Lyft's stock has tanked 17% since going public on March 28. The stock's offering price was $72, and the first trade on that eventful day was a shade over $87. Investors have used the time since the IPO to dig back into the prospectus. They, along with many Wall Street analysts, have emerged from that data dive more concerned on when the money-losing outfit will turn profitable. Some even believe Lyft overhyped its 39% market share in its prospectus. 2 class action lawsuits were filed against Lyft in San Francisco on Wednesday, claiming it overhyped its market share. A Lyft spokeswoman didn't return a request for comment on the lawsuits. Here are 3 quick tips to be mindful of if you are assessing whether to get involved in Pinterest or Zoom. Tip 1. Reread the S1, but it's a must-read. And it's a must-read even after a company goes public, as the market is trying to determine near-term fair value. Investors should be using the first few months on these newly minted public companies to search for overhype in the S1, the type of overhype that will likely be pounded out of the stock come the first earnings report months later. For example, look at this nonsense spewed by Pinterest in its S1. People use Pinterest to visualize what their future could look like and make their dreams a reality, Pinterest says. Right. Or how about this: Pinterest is not a pure media channel, nor is it a pure utility. It's a media-rich utility that satisfies both emotional and functional needs by solving a widespread consumer problem that is unaddressed by many other platforms. Utility. My water and electric are utilities, things you need. One doesn't need Pinterest at all. Tip 2. Know the stats. Each company offers up key stats for investors to pay attention to every quarter. For social media companies, it tends to be the number of users on the platform and the average revenue per user, cleverly called ARPU. One important metric on Pinterest is average per user. It's a mere internationally according to its prospectus, and a healthier dollar in the US. Pinterest has to not only show consistent growth in these metrics going forward, it has to find a way to grow ARPU overseas. If not, the stock should be sent lower. As for Zoom, it has to better diversify its customer base. About 30% of its 2019 revenue came from only 344 customers. Tip 3. See innovation. Investors demand growth, all the time. That is especially the case with newly public companies. Investors want to see responsible, high-margin growth in new areas. To its credit, Zoom has fostered some early innovations beyond its core video conferencing platform. Earlier this year, it releases the Zoom Phone for its business customers. Brian Sozzi is an editor-at-large at News Pulse Finance. Follow him on Twitter at Brian Sozzi. Why Netflix stock deserves to be shredded after its latest earnings report. Lyft's stock price crash has short sellers salivating.